Okay, we're gonna kick off here. Welcome to Fobi's annual and Q1 financial results webinar, which will cover two separate reporting periods. The annual 2023 financial results for the period ended June 30th, 2023, and the Q1 2024 financial results for the period ended September 30th, 2023. I'm Nathan Watkins, and I'll be hosting today's webinar. And thank you to everyone for logging on. Today, we are joined by our CFO, Mark Lotz, and our CEO and Chairman, Rob Anson. We'll start with opening remarks and an update from Rob, followed by a financial review from Mark. And then Rob will recap the year, followed by a Q&A. So with everyone filtering in now, I'm going to pass it on to Rob Anson, our CEO, to give us an update and his initial remarks. Hi, Rob.
Thank you, Nathan. Good morning, everyone. Very happy to be presenting our annual 2023 and Q1 concurrently. The past 5.5 months has obviously been a very challenging and arduous task of getting to this point, and obviously I have a great deal of appreciation for our team, accounting board of directors, auditors that got us to this point of we are today. In best interest of time, we've obviously received a great deal of questions that we intend to get to. I'm going to pass it over to Mark to go through the financial records and results and recap at the end of those proceedings, followed by a very extensive Q&A period.
Thank you, Rob. My name is Mark Lotz. I'm the CFO, and I'd like to take you first to the annual slide. We can look at the highlights for the year ended June 30th, 2023. The key takeaways are that operating expenses decreased significantly. From a cash perspective, operational spending decreased significantly at 44% year over year. We had a $500,000 deferred revenue, which has been received and will be recognized as revenue in the coming calendar year. We closed the Passwork acquisition, and generally the company focused on operational cleanup and a reset for scalable, repeatable business. On the next slide, we look at revenue, which remained relatively unchanged at just over $2 million, despite deferring $500,000 in revenue. On a quarterly basis, the last quarter of fiscal 2023, there was a substantial increase, 7%, which is a good trend, and it's followed up in the next quarter, as you will see. On the next slide, we look at operational expenditures. A dramatic decline in net of cash items from 8.8 million down to 4.9 on a year-over-year basis. And this is evidenced in the last quarter as well, where we see cash expenditures are down to 983 from nearly 2.2 million. On the next slide, we break down the operating expenses by line item. The current period in blue, 2023, we've seen a decrease across the board, with the exception of R&D, which was outsourced to an international team. And that's reflected on the right-hand panel here on a quarter-over-quarter basis. We'll go to Q1. Q1 is the period July 1st through September 30th, 2023. On the next slide here, the key takeaways are revenue, as I alluded to earlier, increased substantially, up 38% on a year-over-year basis, comparing the comparative period in the prior year. Operating expenses continued to decline, as did wage expense. The next slide, take a deeper dive into that. As you can see, our revenue increased substantially, 38% increase. Going on to the next net of non-cash items, we're essentially the same for the quarter. And next, operating expenses by line item continue to decline. Professional fees went up. We incurred substantially more in audit. The company continues to work very hard to reduce the expenditures and focus on those items which are higher return on investment. I think with that, I'll hand it back to Rob.
So this year is obviously a recap of June 30th, 2022 to June 30th, 2023. This year, we've obviously faced great challenges in the small cap space, like every other issuer, but we've seen tremendous scale of the business. Obviously, that's seen and evident in the 150 countries of which we operate today in live contracts, exuding the 100 million plus wallets now that have been issued. We've seen tremendous growth, not just in, of course, the scale of the product, but obviously now from an international support with our acquisitions that we've made to date and the addition of some of our international tech resource team. We've continued to focus on mergers and acquisitions. This will continue to be a great focus of the company moving forward as we look to remain lean and agile, and we've seen the cost reductions of the operation drastically decrease over the last year and into Q1 of this year. We've made a big transition. We've acquired in Passcreator a DIY SMB platform that, with a lot of great detail and architectural design, David has now transformed this into a true enterprise offering. This is obviously seen by the key enterprise contract renewals of which we've seen and the additions this year reported. Customer loyalty has become another great focus and offering of the company, and that truly speaks to the versatility not only of the product stack, but the need and demand for a mobile wallet engagement platform. Beverage alcohol this year has become a new addition and resurgence in focus and efforts. This has proven as a great asset with David Nichols and providing not just loyalty, data, marketing analysis, activation. We see this as a continual emerging vertical to grow in this year ahead. We've experienced many new verticals. We've seen great growth in new use case and pilots, as reported previously, in transportation, in airport operations, healthcare, and automotive. Agency is still proven to be a very important as we look to build very strong channel partnerships. These channel partnerships help us as an enabling technology provider. It solves the fundamental problems, of course, of personalization, marketing attribution, but more importantly, the convergence of our data intelligence and mobile wallet platform. That combined integration provides a very strong value realization, not just for agency, but for their customers. The energy of he who holds the gold, he who owns the customer owns the gold. That's really the foundation nucleus of our approach here. And this is we've made great strides as to the additions of several agencies this year, which ultimately help grow the larger footprint and direction of not just product, but value delivery to market.
I'm just going to kick off the Q&A portion of the webinar. Thanks, Mark and Rob, for your updates with the financial review. If you're ready, I will kick off with the questions. They have been pre-submitted ahead of time from our investors, so I'm just gonna continue with the first one. The first question is, can you explain how and why the financials could be delayed as long as they were?
That is a great question, and if you had told me this is what it would have taken us to get through our financial audit this year, I probably would have shared the same sentiment that you're crazy. Our accounting team did a great job of having everything ready to go. Everything was in order, of course. Unfortunately, with the change of auditors from Manning Elliott to BDO, there's a great deal of extra effort that was needed to be able to concurrently transition last year's audit through the remediation process of which Manning and the company went through. Once that was completed, obviously that's where BDO took over and did a very, very extensive job into the level of detail and due diligence around the company's financials and transactions, contracts, etc., which put us to where we were. The company took proactive measures by means of filing management cease trade order to protect the integrity of the quote, to ensure that the investors had access to liquidity in the market. And we just met our extension that was provided to us based on the exorbitant efforts of our team and our auditors and board of directors, of course, to get this to the point of where we are. I think this has been a tremendous learning experience, quite honestly, for the company to understand the different levels of scrutiny, perhaps that you could say, but more so due diligence, commercial, of course, substance is a word that was relatively used a lot in this, and we checked all of those boxes, which is great. And we sit here now today with, of course, everything up to date as to where we report today and moving forward. This has been a great eye opener and learning experience for us now as to how do we check boxes with the audit process in mind throughout the year, not just when we're amongst the audit here at end of year.
Okay, thank you. The next question I have here is, can you explain what happened with or to the BevWorks revenues?
That's a great question, and that was a big part of some of the due diligence questions that came to us. At the request of the auditors, there was an independent valuation assessment performed in regards to the BevWorks transaction. The independent valuation report came in at a median assessment evaluation of 5.2 million. The company took a very conservative approach in reporting, acknowledging that BevWorks is still an early stage company. Thus, it's hard to truly attribute fair market value. And although the independent report came in at 5.2 million, as I said, we've now recorded the BevWorks transaction as an asset, as an early stage project. And as that progresses forward, we'll obviously record the revenues accordingly.
Thanks.
So the revenues on that, I guess, just to be clear, this hasn't gone. This is still ongoing. It is an asset today. It was deemed at fair market value of 5.2 million. Once again, just to reiterate, based on our advice from our accounting, we took a very conservative approach here. There's obviously a lot of scrutiny and questions around the BevWorks transaction. Therefore, we took an ultra conservative path, which is, of course, balanced and conservative as to moving forward towards our next financial period, where we'll look to insert the value of the BevWorks contract once again.
Okay, thanks, Rob. You made a comment that the company would look completely different by the end of 2023. Can you please explain what aspect of the company you were alluding to?
Yeah, I'll speak to what I can, of course. Timing is very important, obviously, in business, as everyone's very well aware of. We had been working very hard, and we were in definitive stages on two significant transactions that would have drastically changed the position and outlook of the company. Those transactions aren't dead. Obviously, with the great deal of focus and lengthy delays in the audit process leading to misfiling dates and MCTO, we agreed to press pause and come back. We were counting on having these transactions based on the progress and definitive agreements that we were in and finalization periods. We were very positive to have those done by the end of November. As I said, unfortunately, as a result of the timing and lengthy delays of the audit, that's now pushed this into resumption of talks and negotiations, I guess, now starting again tomorrow once all this is behind us. And there's been a few other business projects that we were working very, very hard, our team, to get tidied up before the end of the year, which ultimately too would have shed some light as to new areas of opportunity and focus to the company based on previous interviews and public releases as well. So I think when I look back at that, I don't believe there's anything further that we could have done. Colby and I put a lot of hours into this. Our legal counsel put a great deal of time into this, as well as the accounting folks, and we'll pick these up here. And I'm very positive that I have a positive sentiment. Everything happens for a reason, I believe. And case in point here, you've got to go forward. And a big part of going forward was getting this behind us. And now we'll look to resume those conversations and continue to push in those directions and many others.
Thank you. And this next question flows nicely. Could you please explain what the business is focused on in 2024?
Well, to me, it's focused on core. For us, the last 4 years here has been about commercialization. It's been about learning and understanding of the market and products. I think when we look at the markets now, obviously we were very early, with cuples and the whole 8112, which is great. We're positioned, but sometimes things don't happen as fast as you like, and those are ultimately out of your control. All you can do is be prepared, and that's exactly what the team's done. I think this year the focus, of course, is the bigger, chunkier deals, of which these RFPs are bringing to us in the enterprise focus, of which we have, and successes now. I think that is a great transition from the DIY and SMB platform, of which PassCreator was. There's been tremendous amount of development efforts put towards PassCreator and transitioning this now to a truly enterprise solution and product. And that continued emergence of digital credential, digital wallet solutions, it's at the forefront of everything that we hear about today. And I think the component, and as I said earlier, the integration and support capabilities from a data integration perspective, obviously that provides us with a strong point of differentiation and values, and what's leading us to the successes and RFPs and requests for information processes, of which we've been consumed with over the last few months.
Great, thank you. The next question I have here is, there has been a lot of talk and some webinars lately educating people about naked short selling in Canada. Does the company have any plans or strategy to address this issue?
Yeah, that's one. And to be fair and honest, I sat in a recent webinar that was held around the matter. We do a great deal of work internally to understand from a data perspective as to the anonymous selling brokerage house to brokerage house trading. We track a lot of this stuff in data. We've provided level of support and evidence to the governing bodies and commission. As I said, as far as outside of that, I can't really comment as to where some of that sits. I do understand it is an industry broad problem, not just a Fobi problem, of course. I think when we start to consider, as I said before, this is a world of algorithms and software now. The algorithms and softwares are which lay across all of the market. So it's a lot easier to be able to swing pressure and target certain companies at certain times. But I think at the end of the day, this has been a great part of the recent developments of strategy on the Pulse AR front as to software development around algorithms. And we'll speak more to that as time proceeds here. But it is something we're aware of course. I think it's been publicized a great deal. And we're doing all we can. Ultimately at the end of the day, the focus has to be on growing the business, remaining viable, and once again growing business. Those are things that we can control to some degree. The algorithms and whether there is naked short selling or short selling, those are out of our control ultimately. All we can do is to do our best to drive the business forward, and that's where we'll continue to focus on.
Okay, thanks for that, Rob. Can you explain why you invested so much into the company this year if you knew the company was failing?
Really, I would greatly say that I have great belief in what we're doing. I can understand. I can understand how perhaps people can assume when there's not a great deal of news, I guess you could say, and business updates, understanding that a lot of what's transpired over the last several months played a big part in that, and that's all I'll say. I've led two lives here, I feel. The great frustration and negative energy, to be honest, of which the audit process consumed so much of our time, my time. And then I lead another life that on the business side, so much positivity and stuff that I wish I could have shared and will share now that it's over. So I don't see this here. If people want to say that adversity and opinion of some, share price is always one that people relate to is the success or failure of the business, and I fully understand that. Trust me. But from my internal position here and view of it, I'm happy to have invested as much as I have. I will do so now that I can resume to continue invest into market, into other means of warrants and options like I have done. I've done everything I can to support the company. Like I'm all in here, obviously, as people see, financially, emotionally, intellectually, and I'll continue to do everything I can to protect the interest of the shareholders, of the stock price, and of course my employees. And the team here has done an amazing job of staying focused, and I'm extremely proud of the dedication and focus of our team, because it's very easy. It's very easy to quit, as I said before. You learn a lot when you face adversity. You learn a lot about people. You learn a lot about those that are actually, your friends, as they say, and those are just pretenders that are looking for value, take. And, I'm very touched and honestly grateful for the appreciation of which the staff here in our team has been able to continue to grow the business as people will see and evolve the company moving forward. I don't see this as a failure. If people want to sell their position, I fully understand. I respect that. I don't have any control over that. It's a new opportunity for many to join the story, and I can assure you one thing: it's not over yet. Due to what some people have to say over the last several weeks here, and especially over the last 48 hours, a lot of noise. That noise usually equates to the bottom. I've seen this 5 times over our short history here, and we're going to continue to do what we've done each and every time, and that's continue to battle, continue to move forward. And like I said, it's the adversities and challenges to me where you learn, you get a lot tighter, you get a lot more focused. And once again, that's exactly what we've done here. We've made great strides and progressions on the overall run rate and cost depreciation spend of the business. We're in a better position than a lot of people think, and hopefully here over the coming months, and with the updates, people will start to understand what I'm talking about. So I hate to say it, but it's not over yet.
Thanks, Rob. So then what do you see as the risk factors for the company in 2024?
That's a great question. I think when I look at risk assessment, to me, and it's one I've mentioned before, I would say it's kind of relates to my previous answer. When you have emerging new technologies, you can't control consumer education and consumer adoption. So why we focused a great deal in Europe, as they were several years ahead of understanding the utilization and advancements of the mobile digital wallet technologies and the capabilities and values of which it brings to the daily lives of those that are using it, or on the other hand, those as an operator. So I think where a lot of the risk, I think, is kind of working now in our favor is that we've seen now in North America, based on the business pipeline and the inbound lead generation that we've received this year, and especially over the last quarter, the education and awareness and desire now to transform the digital mobile wallet projects into their business is a great positive and benefit. That being said, of course, emerging technologies of which we provide are always dependent upon uptake of organization. It's great to see now the enterprise moving towards that, and with the most recent RFPs and RFIs that we participated in, there's great advancements in that enterprise, and I would say government funding space and focus for them. The advancements of the technology and digital transformation continue to be on the forefront. I would say for us, the biggest risk, of course, is market conditions, which are out of our control ultimately. Anyhow, we just have to deal with the adversity or whatever sits in front of us day by day, and attempt to make the best decisions possible. They're not always going to be like I said, it's kind of interesting to me, Nathan, because a lot of this here, and for those on the call, it's challenging because you're never going to make everyone happy. As I said before, it's the analogy of if you want to make everyone happy, Rob, go sell ice cream. We make the best decisions that we can, that we believe are in the best interest of the company and the long-term value of the shareholders. Those might not always be the popular sentiment and value. And I'm at a point now, and at a confidence level now, where I'm able to shelter out that negative perception and opinion, some of the remarks that are made, to me on calls that I take, and that's the other thing is, I continue to take the calls and respond. And like I said, whether people like the answers or not, that's out of the control and can't make everyone happy. At the end of the day, we continue to strive forward and push forward, and that's what we'll continue to do here. So,
Okay, thank you. The next question I have here is, can you explain why such a gap in target projection given?
part of that have to go with the audit process. Some of the shifts in reporting that transferred from Q4 into Q1, as Mark alluded to. We've got over $500,000 in deferred revenues that will be reported in future sessions and financial reporting periods. Obviously, the big one is the deferral of the BevWorks. Played a great deal in that gap. And I think on the Pulse AR side, there was a couple of deferrals as well there that ultimately led to the gap and the deficiencies in the numbers of the projections of which we gave, unfortunately.
Okay, so the most recent release with TCB announcing that Toshiba is now supporting the 8112 POS integration. Is this the year that 8112 takes full flight?
Well, it's like I just alluded to. Some of these things are out of our control. Obviously, Toshiba is a major dominant player in the grocery and convenience space. Don't quote me, but I believe they've got over 50% market share. So I would say conservatively, yes, it's a step in the right direction. And I'm of the opinion personally that this is a major catalyst for 8112. And obviously we've done all the work to integrate, position, support, and we will continue to do so. I think this is a year of tremendous growth for not just 8112, but the grocery and convenience industries from a digital transformation perspective. There's a great deal of push from the digital transformation in these spaces, and obviously the cupels and Fobi technology is ripe for that and sit there in a lot of these different opportunities of focus for them.
Okay, thanks. So looking back at the last year, what was your biggest learnt lesson and what regrets do you have?
I think the biggest learned lesson, I'd say there's two things personally. One I would say is perception and attitude. There's a lot of variables in business and life that unfortunately we all don't control. I think it's how we, so you could say, to those problems or issues when they come up. As I said, you do learn a lot about people when you face adversity or challenges in business and personally. This is it's been a challenging year for myself, as I mentioned, from a personal and health perspective, and it's something that fortunately was a misdiagnosis and something I was able to work through with my family and continue on here with focusing on the business and the viability and progression and development of the business at the same time. I think when we look at each decision that's made in life in general, it can't just be for today. I think a lot of it, as I've seen and witnessed here over the last several months, there's a great deal of tendency to get caught up in the moment, and that puts you at risk for making knee-jerk reactions. And if you're going to start making reactions based on sentiment or opinion of today or position of today and you're not assessing the importance of the median and the future, you're really selling yourself short, and you're cutting your nose off, despite, as they say. So I think the way and approach to not just life, but the adversity of challenges of which come with it is a big learning experience. I've really sort of come to the understanding that you hear it a lot, that there's no such thing as failure; it's all learnings. We've had a great deal of learnings from a positive perspective, of course. Not that I'm going to say everything's been positive from an outlook and public perception. Fully understand that, appreciate that. But like I said, it's been a great year of leaps and strides from a personal and business progression of learning. And I would say the other thing that I've learned is really about positivity. The power of positivity is a big one. I see that social obviously plays a big part in that. As far as negative sentiment, people feel great surrounding themselves with people that moan and complain, and that's what they're attracted to, and that's fine. That's not something that I subject myself to. You're only as successful as the people you surround yourself with. That's one we've all heard at nauseum. That's very, very true. You know, I've always looked to surround myself with people that one are smarter than myself, two that have the same outlook on life, and that's energy. Energy is a very, very important thing to me, and manifestation plays a big part in what future brings. And it's kind of, like, as I said from the beginning, this was the premise of the Matrix ticker symbol. We've to date had a lot of great things happen. There's been a lot of great things happen over the last several months. That not everything is negative perception is what some of the public opinion is, and that's fine. Hopefully, here either they find happiness in selling shares and move on, or they become patient and realize the battle's not over, and there's a lot of fight here and a lot of positive progressions that have occurred over the last several months that will unfold here. So those are the two, I think, for what I've learned. I'm sorry, what was the last one? Was it regrets, you said?
Yeah, what regrets do you have over this past year?
Uh, I think it's the sad part about it to me is that we had really gained a lot of positive momentum on transactions, on a couple really key material business cases that we're in late developments on and final stages. And I think that's a tough one, of course, because I see the frustration of some of the team that were working so hard to bring those to fruition. Um, the regret is, I think, the remorse I feel is for the frustration of the team. Not necessarily that they didn't transpire when we were hoping to, because, like I said, that's a variable out of our control. But we'll continue to resume those, and the team once again will continue to focus down that same path of which they have and they are today. And it's a path of positivity and focus. And I think that's one of the, I guess you could say, regrets, is that it didn't happen to have the team, I guess, reap the rewards for what that meant for them. And ultimately, I think that transpired into the negativity, unfortunately, and delays and distraction of the audit. But that's behind us, and we can't control that. And it's something that it is in the rearview mirror now. And after today, we're right back at it, and that's where we're headed.
Yeah, thanks, Rob. So the next question flows a little bit into that. So the company has always been very active when it comes to news releases. However, over the last several months, the company has gone quiet with minimal news. Why is that?
I think two parts. It probably doesn't take a rocket scientist to figure out that when you're sitting in a MCTO position with delayed filings, there's not going to be a great deal of interest to hop into a stock with those sitting ahead of them. I would think that for most they would understand that there's no point putting good news into a negative paused sediment per se. Perhaps that makes sense, where it's kind of putting good money into bad, as the saying goes. I think that the bigger part of it, to be honest, was the almost quiet period, if you will, of which from the audit that spilled over onto us. And I wanted to ensure that we were obliging by all requests to ensure that everything we had was 100% accurate, one. And then from another perspective, it was about holding off as to when we could make a difference and provide a positive transition in market sentiment. Not everything's by choice. Some things are by circumstance, of course. And I think it's a good idea now with the pipeline of which we have in place and the deals that we're currently onboarding. That'll change, and we'll get back to the expansion and focus here of the business into the enterprise and RFP process in the pipeline and those that are being implemented today. We'll have news to share, and we'll be key and selective as to what it is to ensure that it's a balanced approach, and to ensure that's working with our auditors now throughout the year on positioning of contracts to ensure that it's in the best interest of the company's shareholders here. And that's where we'll continue to press forward on the resurgence of the company business updates, corporate updates. We will share a corporate update in the near future, where it speaks more to the progressions and updates of the company from a business perspective and a pipeline perspective. I didn't want to convolute and distract everything here, as I assume there was going to be a great deal of questions coming in, like we've seen here and working through today. So I hope that makes sense.
Yeah, thanks, Rob. So this is a big question. What part of the business is proving to be the biggest challenge right now?
The biggest challenge. I think the biggest challenge really is focus, if that makes sense. I think the focus now, we've been very fortunate here to uncover a couple new verticals for us where we're seeing some good early stage traction and interest. And it's something that's ready to go to market today. These are all revenue generating opportunities. There's a clear demand and a clear interest in the product from implementation on their behalf. And there's a clear need. And obviously that bodes well for us. I think it's a long and narrow approach for a lot of the business now. And when I look at our pipeline and assessment of where opportunity is coming from, that's the approach we're taking now. It's the focus of the return on the time in dollars, and not saying that there won't be any future pilots or use cases, because those are incredibly valuable to prove out the technology and to gain data and insights around particular business cases per se. But I think that's the challenge, has been focus, because we've really focused a great deal on the strategy and core product and advanced enterprise commercialization of it to support the business and the RFPs and enterprise solutions.
Okay, thanks, Rob. Moving on to his Pulse IR question for you. Pulse IR was launched and appeared to gain some attraction out of the gate, and we haven't heard much about it since. Can you speak to what is happening with Pulse IR?
Sure. Our strategy when we launched Pulse IR was to be able to bring a mobile and digital communication tool. The world has gone digital, as we know, and the use of email marketing is still 99% of the capital market world. Our goal was to bring on a handful of use cases for us to be able to ensure the commercialization and product fit and a lot of the different product roadmap components, if that makes sense, that will be implemented here, of which we're building out at moment. So our goal wasn't to go bring on 100 accounts. We have a broader strategy that we'll speak to in due time here over the next period of our corporate updates and whatnot. But I think the Pulse AR that gained us a lot of valuable insights as to utilization, integrations, data reporting, data analytics, and insights. As I said earlier, a lot around the trade data and whatnot. I think that it put us in a position to once again learn and to refine the product. And there's been a great deal of focus of other product development and integration over the last 3-4 months on the Pulse IR side, and there's a great deal of opportunity of which we've identified in the wealth management, communication space, capital market space, and public relations, and of course event marketing. So there'll be more on Pulse IR, and it is something that's it's going to, in my opinion, provide a great deal of value, not just to the market, but from a shareholder perspective.
Hey, good to hear. So despite working with Janam the last couple of years at the Oscars, are there any other projects in the works, or is it just a one-off, and why?
I'm sorry, you blipped out there the first part. Could you repeat the first part of the question?
Despite working with Janam the last couple of years at the Oscars,
okay.
yeah. Are there any other
Janam.
projects in the works? Yeah, might be my accent there.
Yeah.
Are there
Okay.
any other
Yeah.
are there any other projects in the works, or is it just a one-off, and why?
No, we've obviously Janam was acquired this year, or last year, I guess you say calendar year, which has actually been great because there's a new level of opportunities as we've identified, of course, in the healthcare and transportation space. Their parent company now has a great deal of focus around validation of access controls, which obviously play well into the wallet. There's nothing that I can concrete report and share today, but know that partnership and opportunity of interest and focus is still live and active, of course. And there's multiple projects that we're currently in where access controls and verification play a big part from a hardware perspective. And that's kind of all I can say about that for now.
Okay, great. So will Adam Hadwin continue wearing the Fobi insignia on his shirt collar for the 2024-2025 golf season?
Yeah, that's a great one. And I mean, I will answer it now. This was going to be part of our corporate update, but no, we've decided to end that agreement with Adam and the fan pass. Once again, it was a great learning exercise for us. It was a pleasure working with Adam and his team. We learned a tremendous, great deal from the opportunity there, and we've looked to deploy those resources elsewhere now in new exciting verticals and opportunities. We've gained a lot of great relationships as a result, not just in the golf world and market, but in charity, of course, with GVCI and others. that they're involved with. We'll continue to, of course, support different events, and we've already got some other charitable initiatives in the works. But no, as far as the Fobi logo on the collar, that's done, and we'll continue to look forward and move towards sponsorship, partnership, and fan pass opportunities, deployments with other athletes in other verticals, as I said.
Great, thank you. We've got a few more questions here. So, are there any key catalysts that are ahead that you could speak to?
Key catalyst. Well, I can't really speak to on a great deal of insight to stuff that's not already public, but yeah, for sure there are. I mean, there's some RFPs. There's some great RFP process that we've won that's been implemented and implementing now. There's great new verticals, of course, and I think, as I've said earlier a few times already, you know, I think it's the transactions that we'll look to pick up here, that have the ability to transform the company in a big way, in my opinion.
Great. So now that the audit is complete, will there be a revised revenue forecast?
Yeah, we'll work to provide in the next bit here on all of the updated revenue forecasts and projections. Obviously, we've been burning the candle and working literally around the clock for the last weeks in order to get this filed and avoiding failure to file cease trade order, which of course was imminent if we had not filed on Monday when we did. So all of these things, yes, there'll be updates to all of it over the next course here once we catch our breath and get caught up, and that will be something that's, of course, in the near future.
Great. And one more question here. Obviously, everyone is not happy about the share price. What do you intend to do about correcting it? And is there still hope for a recovery here?
I think this is a tough one because I don't know what it is over the years here, but obviously I don't control the share price. I don't control when people buy. I don't control when people sell. I can only control when I buy and sell, of course. And these are parts of things that are once again out of the control. I think this is not financial advice in any way. I think that I can confidently say that we're one of the most relevant tech stacks that are in the market today. And whether people value what we've done, that's up to their personal opinion. I mean, we service Fortune 500 companies, global leaders. People I think tend to look at a couple agreements where they get hung up on. There's a hell of a lot of great stuff and positive stuff that our company's done. I would say, when we look at a de-risk perspective, we're one of the few that's not servicing debt, which to me is always usually the kiss of death. We've avoided that. The business is growing. Might not be at the pace as what people would like and how I would like, quite honestly, at some times. But as we do see here in Q1, there's positive growth from last year, 44%, or this is something that is positive. And as I said, we've got a lot of great momentum. We've got a very strong, solid business pipeline that we're working through. The inbound lead generation speaks to itself as to how these businesses are coming to us and the size of them. That's something to be said. And that does speak to the relevancy of our tech stack. The experience of which we bring is absolutely second to none when it comes to the world of digital mobile wallet technology. And I would argue all day long that David Spoor is the industry leader when it comes to knowledge and experience in that. And our team is tremendously focused now. And, you know, is there hope? Hope, yeah, there's, unless you've sold your paper, of course there's hope. You know, we're focused here on regaining momentum. It's all I care about, is back to now share price and capital markets now that the audit's done, and closing out the business and getting market messaging dialed in here. So I have a great deal of confidence, for what it's worth, to those that doubt and are looking for hope. And I think it's where the confidence does come from within. That, as I said, we're believe it or not, in, I would say, a strong position here. And the position of strength to me comes from really commercialized products, transition to enterprise opportunities, and you know, the markets here for those that are getting in is a hell of an opportunity. I mean, I can't believe where the stock price sits today, based on everything, the contributing factors of which I've mentioned, and knowing, of course, what I do know. You know, we'll see how things play out, but there's a hell of a lot more than hope here.
Great, thanks, Rob. Well, that concludes all of the questions we have here. Was there any final remarks from yourself that you wanted to wrap up with?
Yeah, I can understand frustration of those that have chimed in over the last weeks, and very loud. You know, I would hope they would have the understanding that you know, I don't have the bandwidth to be able to get back to everyone same day, but I'm working through a lot of it. Some of it, you know, is ignorant that I'm not going to respond to. But there's been a hell of a lot of great, well thought out shareholder comments, questions, concerns on a lot of it, and rightfully so. I understand that. And as I said, to me, it's always how you react to adversity. I'm very proud of the team, as I mentioned here, internally, and especially the accounting, to get through what we have, because there's a lot of nights that I wasn't really sure if it was going to get done. So this we've been through a heck of a lot here over the last several months. It's been very distracting. It's pressed pause on a lot of business opportunities and on transactions, as stated, but there's a great deal of positivity, and that's you know, count us out if you may on some, but I also understand too that everyone loves a comeback, and we're not going anywhere, and we'll continue to fight and push like we have done in the past. And this is nothing new. I've been in this position here 5 times of people being disgruntled and fire sailing their shares out of frustration. And until you sell, you haven't lost. And you know, we went public 80 cents, I believe, on our go public round. We hit all the way down to 5 cents. As you can imagine, there's a lot of people that panicked and articulated a great deal of displeasurement and the vocabulary of words that I was subjected to. It was interesting, but once again, we fought through then, and we've got a track record to do so now. So we're getting on with the business, and we're getting back to focus now of positive progressions and advancements on all fronts, and forward we go.
Great. Well, thank you, Rob, and thanks, Mark, for your detailed presentations and updates from the financial periods. And thank you to all our thank you to all our attendees for logging on this morning. This webinar will be up online very shortly, so you can review and you can look back. So thank you again for everyone logging on, and we'll speak to you next time. Goodbye.